Welcome guys, welcome to another video. Today we're not talking about ADA, we're talking about Bitcoin. I will touch the ADA topic later this video, and you will get a new video for ADA over the next days. But today it is important to understand where Bitcoin is. That's why we are talking about Bitcoin. We want to understand where we are in the cycle and what are the most likely scenarios here at this point. And yeah, let's dive in. I'm going to show you a little bit of history. I'm going to derive why I came to this specific count, why I think this is the main count, why this is the most likely path. And yeah, let's get in. So to understand why we are likely in a cycle wave 3, we have to go back in time and yeah, look at the period where it all began. So this was 2011. Our first bull run here for Bitcoin. Our first impulse to the upside, a wave 1, then followed by a wave 2, a very short, brief a bear market here that led into this wave 3 here, followed by a wave 4, right? Easy to see the count, 5 waves, and finished by this super extended wave 5 to close out the first cycle wave for Bitcoin. This bull run was mainly led by cypherpunks and tech nerds, very early entrepreneurs, not so much retail, no institutions and all that, right? So really went under the radar. Media really started to cover Bitcoin a little bit in 2013, not really here or here. It was actually 2013 at the top here where you could have read about Bitcoin for the first time. So yeah, went completely under the radar. We then saw a huge correction into wave 2, the first bear market where people thought, yeah, that's over, crypto is dead, Bitcoin is dead, it was all a scam. There were just a few altcoins around back there. You also needed to buy Bitcoin to get altcoins, which was also fueling this rally here, right? So this was the first big letdown. This was it. And of course, it was then followed by an even bigger bull market, which is the 2017 and 2018 bull run, which closed out here our cycle of wave 3, followed by a wave 4, which is a wave 4, right? I see people charting this a 1-2-1-2, but it doesn't make any sense, right? The second wave 1 would be way too high. It would hit a way too high extension level, and also if this would be a wave 2, you would actually penetrate this wave 1 here, right? Very likely you would penetrate this wave 1 price territory with your wave 2. So this is not a wave 2. This is most likely a wave 4. It's just technically most fitting, and from market psychology point of view, it also makes the most sense. So this is a wave 4 most likely, followed by then another bull run into the 2021 top, where everyone thought that a Bitcoin would hit 100K, and we can clearly see 5 waves here, right? 1, 2 was the COVID crash. You then go into this crazy run where Bitcoin pumped from roughly 4K to 60K. It was really insane. I was there back then. This was my first cycle in crypto, where I was a very active trader, but I pretty much only traded Bitcoin, maybe 1 or 2 altcoins here and there. So yeah, this was my first bull run as a Bitcoin trader. So 1, 2, 3, 4, 5. You can see clearly this is an impulse. It finishes the cycle wave 5, and with that it finished the first super cycle wave. And of course, this mania, this speculation bubble in crypto had to burst at some point, and that's why we saw this very severe bear market, this crash into the November 2022 low, followed by another big bull run, which is still ongoing or could be over. Let's find that out. So we can see that we have a nested structure here, not so good on the monthly chart, but on the lower time frames. It's actually really hard to not count a nested structure here, and it just makes sense. If this is a cycle wave 3, you would have a nested structure here, because the wave 3 is most of the time the extended wave, and if it is extended, it most of the time has a nested structure. And that's what leads me to the expectation that we actually will really take this 1618 here. We currently just touched it, barely touched it. I think there should be another squiggle if we can hold crucial supports here. There should be a final squiggle up, and to actually get this level, or maybe even get even a little bit higher to the 200% at 150k, because if your wave 3 is nested, right, it just hints to an extension, and an extended third wave, it just closes above the 1618, right? That's a really fine detail, but I would not rely on that, right? You can have a nested structure here and still not get above this level. That's absolutely possible. So is there another way how we could see this? Yes, as edit wave analysts, we always want to have multiple scenarios for risk management purposes and to get the bigger picture. And yeah, in this count, in this alternative count, I'm really trying to be objective here. I'm not wishing anything, all right? I'm not trading my hopes and wishes. I'm trading what I can actually see on the chart. And if the chart is bullish, we're bullish. If it's bearish, we're bearish. And if it's neutral, we are doing nothing and wait for signals, right? So let's try to be objective here. This is not a count. I'm not ranking this count down because I don't want it to happen. It's just objectively not that likely. Okay, so I want to make that point clear here. So wave 1 was not found here. The super cycle wave 1 is still yet has to be found. It could be in. There could be still. There could also still be another extension to the upside. But once we found this wave 1 top here, we will then go into a more severe correction into super cycle wave 2, which is actually the only difference, right? We would not go into a super cycle wave 4, but in a super cycle wave 2. So that's the only difference. And is that likely? Do we have evidence for that? 3 points that makes it not so likely. First of all, we have very likely we have an extension here, which is just very untypical for a wave 5. Also, this wave 5, if we measure the extension targets, right, the length of wave 1 and wave 3 combined, so that would be your count 1, 2, 3, 4, 5. So if we combine wave 1, wave 3, and here click the low of wave 4, we get the extension target of this fifth wave here, potential fifth wave, and it would hit the 1618, which just is super extended for a wave 5. It is the most upper range target for an extension, for a wave 5 extension. Everything above would be highly unusual and abnormal. So if it's a wave 5, it is extended to the maximum, which is, yeah, again, makes it less likely a wave 5. Wave 5 is just not that super extended on a cycle scale, right? On the lower time frames, okay, but not on a cycle scale. So it is rather a wave 3. That's what I want to say because of this nested structure here. Another thing is you have this wave 4 here, which is penetrating the wave 1 price territory. Not on the monthly chart, and that shows you how ambiguous things sometimes are and how subjective TA is, right? If you stay on the monthly chart, you can say, yeah, fine, it's a wave 4. But on the lower time frames, it penetrated the price area on the weekly, 2-weekly chart. So that's why I always advise to do multi-time frame analysis to get the bigger picture, to get the whole picture. So in sum, taking everything, taking all the evidence, it's just not that much like to be a wave 4. So another problem is this ABC flat here. Yes, again, ambiguous. It does kind of look like a 5-wave move, but on the lower time frames, you will easily see that this is a complex correction to the downside. W, X, Y, X, Z. So a super complex, sharp correction, a so-called triple zigzag. You can see the ABC here in the final part. So likely not an impulse, rather a complex correction. And also this move here on the monthly chart, you could think it is a 3-wave move, but it is on the lower time frames. You can clearly see that you're dealing with 5 waves to the upside. They are impulsive. Yeah, hard to see a W, X, Y, or ABC here, in my opinion. And yeah, that's why I think this scenario is not so likely, that we're not dealing with a 1, 2, 3, 4, 5. Okay, guys, let's get to the exciting part of this video. Let's assess the question. Are we at the end of the cycle? Is the bottom in? I cannot give you a definitive answer. Of course, I have no crystal ball, but we are. I think you can clearly say we are either at the top or very, very close to it. And there is a count that would provide us with one more move to the upside. And I think it is the most realistic count, or one of the more realistic count, because we are dealing with a nested structure. And if you count this wave by the Elliott wave rules, actually, if you just stick to the rules, this is one of the more likely counts. So first of all, this could be a super cycle wave 3. We already found that out. And if you have a wave 3, there is always a potential for the wave 3 to be extended, because it is the wave that is most of the time extended. So far, this wave, this swing here, couldn't get above the 1618. So I do actually expect for this impulse to have a final leg up to take this level, just to confirm it technically to be extended. And a first hint is this nested structure here, this series of 1-2s. It leads to this series of 4-5s, 4-5s, and potentially another 4-5. I do count 3 1-2s, which then would let us expect another final 4-5. You have your starting phase, 1-2s, 1-2s, 1-2s. You then go into the parabolic phase, or the part of the cycle where you make the most gains, right? This was the biggest move of the cycle so far, 200% gains. With the wave 3 that is nested into another wave 3, which is nested into another wave 3. So this is the wave 3 of 3 of 3, which hits the 661.8 extension level, which is common for the most nested wave 3. Let's call it that way. And once you went through this parabolic phase, you then start to resolve your 4-5s, right? So we are definitely in the final part of the cycle, and the final part of this impulse, where we work on this 4-5s. According to this model, it is definitely late in the cycle. Okay, next we're going to look at a not so bullish count, and it is absolutely valid. We have to take this into consideration. The top is in. 1, 2, 3, 4. And now there are certain variations, so you can read this wave 5. There are people looking at this as an ending diagonal, right? 1, 2, 3, 4, 5 as an ending diagonal. While it is not sure if this is an ending diagonal, because it clearly has impulsivity in its waves 1, 3, and 5, but you can clearly say that it is something is contracting here, right? This is right. It is contracting. It is running in a contracting fashion. So, is it a leading diagonal? Is it an ending diagonal or not? I don't know. It could be one. We have to see. But currently, I would say it's rather not an ending diagonal. It is a fifth wave that runs in a contracting fashion, but without being an ending diagonal. I would just say it's extended 1, 2, 3, 4, 5. If 5 waves were the first wave is extended because this was a very severe correction, there is room, there is potential for the next impulsive wave to be extended, right? If you have a super severe correction and you V-shape out of it, you just most often have an extended first wave. Then your third wave and the fifth wave, which is the smallest. So that could have played out here, right? So this is a fifth wave. This could be a fifth wave according to this model that definitely topped. No room to the upside, no more coming back to test the highs. It is over, right? This count says it's over. We then started this impulse to the downside, and at some point we of course will see a rebound, but it will trend down. And according to whatever count you are in, right, either super cycle 1 or super cycle 3, this will be a very severe correction, or rather a shallow correction for a wave 4. Okay, let's finish off this video with a not bullish but also not very bearish count. It is a hybrid. It is a little bit in between. It is for now a bearish, but over the long term we could see a new high. So it is just a it is just a pause of the bull run. It is a mini bear market. Let's call it like that. So why could that be? So first of all, this was a very severe run. This was a crazy bull run. Not for all coiners, unless you were in the right projects, but for Bitcoiners. For Bitcoiners, this was an incredible bull run. So it was an incredible Bitcoin bull run so far. And you could make the case that we just need a big correction, right? It's just, we have to reset the market at some point to go higher. And liquidity is coming into the system. The business cycle is likely not over yet. So how do we arrange a situation where we can still be bullish in the long term because of the liquidity cycle and still correct very severely because we just need to reset the market to go higher? In that case, you would have found your wave 3 top here in December 24, and now you have your flat into wave 4. And then somewhere next year you see a new impulse, another impulse to actually finish off the cycle. This would not be in line with the 4-year cycle. It would be part of the extended cycle theory. So in this case, we would likely go to 75K, and in a very extreme case, it would even test 60K. So I would refer to this as the mini bear market, right? So, and we still assume we are in this super cycle wave 3, and we need to get above the 1618. It would just be, more fitting, more likely for a wave 3 to get above it if we are working with extensions, which is clearly the case here. So it has some, it is a valid count. In my opinion, it would be, it would make sense to prolong the cycle, to stay bullish long term, but to, on the same side, to shake people out, reset the market, to have room to go higher. So keep that in mind. Not going to say this is happening. This is just an approach that I think is very, very interesting. Okay, let's conclude. The cycle could be over, but it does not have to be over. We don't have a technical proof for Bitcoin to be in a bear market. The next very crucial level is going to be 100K. We really want to hold 100K. It is very important. And then we can stay short-term bullish. Then there is a real possibility to see new all-time highs actually, even in so close as November. So not everything is over now. Yes, altcoins do look bad. We had a severe crash. It was 100% manipulated, but this is just the market. We have to play by the rules and use no leverage. That's important. If you want to survive in crypto, you cannot use leverage. It's just the reality. If you use leverage, you're gonna get wrecked. Even if you get wrecked after 4 years. It took me many years to get wrecked the first time, right? I have very good risk management, but at the end of the day, they will get you. If you use leverage, they will get you sooner or later. So if you're lucky, you will get liquidated very early on, so that you will make this lesson. Some people get liquidated after many, many years and lose everything. So don't use leverage. Only trade spot. If you use leverage, you need over-the-top risk management, but most people just don't have that, right? So don't use leverage. There is still room to the upside. We have no technical confirmation for a bear market, but we have to very, very closely follow the price of Bitcoin and for altcoins, and this is what we are going to do here on this channel. So if you like this, leave me a like, comment, and subscribe if you haven't already, and I will keep you updated. I think I will upload an ADA video over the next couple days. Shouldn't take me longer than 2 or 3 days. That's it. Have a good night, have a good day, and see you in the next one.